Thank you for tuning in to another edition of the Vulcan Report. This end-of-day report is for trading on Tuesday, March the 20th, 2018. For all those that attended the Tuesday Terror Dome with the Guerrilla Economist on the Rogue Money Show, I appreciate the love and the support. It was good to be back. Jumping right into things, the Bitcoin futures. I did send out the alert, tweeted that out earlier, giving you the intraday price inflection points last week for the key reversal. If you look at this daily chart here, it's right there before your eyes. I tweeted this, told you where the intraday price inflection point was going to be. I sent out today, letting you know what the intraday resistance zones would be, that 88 to 89 level zone. And I showed you that 90 was a hard resistance. We talked about that on the Rogue Money Show. And as you can see here, the market is struggling. All right, so what we have right here, if you can see at the bottom left-hand side of the screen, if not, I'll just blow it up here. I'll put in the key window here if the system will allow me to do that. Got a lot of things running in the background, so that's why things are moving a little slow. All right, so when you pull up the daily chart, you'll be able to see things just a little bit better here. All right, so market's bouncing off of this low point here on the daily chart, and then here you are chugging along, finding great resistance at the current price level. The trend line resistance there is 92.94. All right, much resistance there, and that is where we're having trouble. And if the market's going to really try to give a go at it and break out topside, it's going to need to continue to close above 87.41 tomorrow. All right, it needs to close above that. If not, then I'm afraid that the sellers are going to come in and take this market back down below this point here, and then we're going to open up the spigot wide to test the 58.80 low. That's the contract low right now on the Bitcoin futures. Okay, so that's where we are right now. All right, so how does this fare with GBTC? Let's take a look. All right, so GBTC right now, last week failed to gain that momentum for this week. This week the market is trying to get something going here. It is struggling right now. All right, it's trying to get it up and go. Needs to close above 1553 this week. That would open the door for that rally. And as you can see, got mad rampage coming up here. BTCS needs to catch up, so it's going to be playing catch up here. It's well below its Kumo cloud now, and seems to be trying to trend lower. So this one, like I said, it's a 6 cent stock, so it's a longer term play. I'm not really concerned about the day-to-day price fluctuations. This is a longer term play, so this is just one that I'm holding. All right, let's take a look at the GDXJ, looking here at the miners. All right, miners are still asleep. All right, you got sideways to slightly lower prices here. All right, bearish sentiment still in the market, downtrend channel still in effect. Price itself, along with trend lines, are below the Kumo cloud, momentum line below the Kumo cloud. Market's dead in the water. It really needs to get something going here, because if not, it's just going to, over time, continue to trend lower and head lower and head lower, and it's just a grind right now for the miners, unfortunately. Taking a look at gold, you can see here the metal is leading the miners right now. Now you got sort of a downtrend channel here. It's not really a downtrend channel. It's just a sideways consolidated market. You've just been trending lower toward the bottom end of the trading range, from the higher end of the trading range to the lower. That's all that's been happening. So this one here is just still consolidated, but you're at a key level at this point in time. All right, market needs to close above 125.28 this week if it's going to have any hope of getting up and going here. All right. It should be noted that a close below 123.96 marks a short-term top and is very bearish, and you can see price drop precipitously into this Kumo cloud. All right, so heads up on the GLD. On the future side, now I have mentioned it before. For those of you who are new and don't recall this, I've always said that the GLD tracks the gold futures almost perfectly. So you've seen one chart, you've seen them both. All right, and I actually like the GLD a little bit better because equity pricing is more efficient than the futures pricing. It's just how it is. But you can see here the charts are the same. All right. Gold needs to close above 1322.10 if it's going to have hopes of putting back in another hope at a run toward the top end of this range instead of cruising here at the bottom. It should be noted that a close below 1295 puts in a short-term top and is mad bearish for gold and will put prices deep into the Kumo cloud. And you could even be locking in at that point if support is lost. Looking at the silver now. Silver is still trading below the Kumo cloud and just getting ready to fall off the cliff again. Not looking good here. If it's going to try to put in the bottom, it needs a close above $16.44 this week. If not, it's dangerously close to locking in another leg down. And this one could be quite vicious, as we could see the possibility of taking out the prior lows back here. That will get us deep into the $15 and even possibly the $14 handle on silver. Looking at SLV. All right, SLV is also dangling over the cliff. All right. This market needs to close above $15.50 this week if it's going to try to put in some kind of support and hopefully get a run back up toward trend line resistance at 15, let's say 16 bucks. So this one's just dangling, all right, right now. And jeopardy of just keeling over. Let's look at the silver miners. Silver miners are looking pretty much the same way. They're in the same shape right now as silver, all right. Silver miners need a close of $10.65 this week if it's going to try to put in some kind of support and possibly make another attempt run toward that $12 resistance. Downtrend channel is fully intact. Everything is trading below the Kumo cloud. All right, trend channels, everything. Momentum lines, everything. This one is still super bearish, unfortunately. All right, this is a shout out to one of the guys in the trading room. You've been asking me about Chipotle. So here's Chipotle. All right, so as you can see here, Chipotle has been in a downtrend for quite some time on the weekly chart. All right. Hit a key support at $247.52 and has since tried to bounce from there. As it is right now, the market needs to close above $316.73 this week if it's going to try to make another run toward topside resistance at 343.22. It doesn't look that it's ready to do that. It looks like it just might roll over. You are in an established downtrend channel, all right, with accumulating bearish momentum. Looking for any type of a rally to possibly be sold on this. Another danger point is that you're right here at the bottom of the Kumo cloud where your trend lines and overhead resistance is. Strong overhead trend line resistance between the range of 334.65 and 343.22. That is your overhead resistance zone in Chipotle. It looks like prices are going to be headed back down to test this support low. I'm wrong if the market can close above $316.73 this week, because then that opens the possibility of another topside run like it did here. I'm going to blow this up just so you can see better. See, it maintained that momentum for 3 weeks in a row. Actually, let's make it 4, because this managed to close above it. So you have four weeks in a row where the market really tried to get something going, had the momentum behind it, and even though you closed down last week, it was above the momentum line, which opened this door for possible green shoots this week. So it's still trying to maintain its momentum. It's just that it really can't go anywhere because this overhead resistance trend line is pretty powerful. And then you got the bottom of the Kumo cloud here too. So it has a lot working against it to overcome. I'm not saying that it can't overcome. It's just that the likelihood of it overcoming at this point is slim to none. So this one is still bearish. Trend lines, price, channels, momentum lines, everything is below the Kumo cloud. So this market still remains very much a bear market. All right, so let's take a look here at crude oil. Crude oil is now in a downtrend channel, but it's all taking place in a bull market. So this one, I'm looking to see if price can get its legs underneath of it. Market just needs to close above 62.06, and this one should be in play to take out the 66.65 high. So this one is definitely on alert watch for a possible topside breakout that could take it as high as $70 a barrel. Looking at the equity side of this play, all right, you have DIG, which is in the Kumo cloud right now. It needs to close above 34.51 if it's going to benefit from a possible crude oil topside breakout. This will put this above the Kumo cloud and back in a bullish run. And the initial target on this one, believe it or not, would be $45. But right now, that's wishful thinking until it can regather its momentum. So where does this put us? You look at your XLE as another play, and it's the same as the DIG, and you can see that XLE needs to close above $67.79. That will give it a possible enough momentum to get above the trend line resistance of 69.01, and then topside the Kumo cloud, and then you can make that run back toward $80. So some things in the works here. We'll just have to see. You got this massive trading range that you're in. So you're stuck in a trading range, sideways consolidation, and everything is inside the Kumo cloud. Trend line, price, everything. Momentum line, everything's inside the Kumo cloud of death. So this one we'll have to wait and see if it can get something going or not. All right, taking a look here at bonds. Bonds are still very much in a bear market. As you can see, it fell from grace from a high of 177.11 down to 142.04. I do believe back here, I told you if you go back and look at my prior videos, you will find the videos of me telling you exactly what was in store as far as the lows, and I did tell you we would get down here into these 140s and even possibly the 130s. So go back and check out the videos from around the time of between July, the week of July the 11th, all the way up until the maybe November the 14th of 2016. You'll find it when I talked about the bonds and told you where we were looking at going, and we've already hit the initial target. So at this point, bonds is at a fork in the road. It could go anywhere from here. It already met the downside target. Currently, though, everything is still below the Kumo cloud. Price, trend line, momentums, you name it. But this one's on alert watch for putting in a bottom, a base. Looks like it's trying to base out here and then rally. That would really make it more difficult for the Fed to raise interest rates, because your yields would be falling at this point. If this bond market starts to rock and roll, it could easily get back above the 160 mark, cut right through this Kumo cloud like a hot knife through butter, and then that would bring those rates way down. Those yields will just fall through the floor again. So as long as it stays below the Kumo cloud, Fed can raise those rates without it sending too much reverberation through the market. But once it gets back on the positive side of things, back into a bullish configuration, it makes it harder for the Fed to raise those rates without it having negative side effects and sending ripples through the market. So it is what it is right now. But watch it, because if the bond closes above 144.07 this week, it sets up that bullish configuration that we talked about. All right, so watch out for your intraday price inflection points, because they're going to be key and critical, and I will be alerting you to that. If you don't currently follow me on Twitter, my information as far as follow me on Twitter and follow me in other social media platforms should be indicated at the bottom of the video. So look at the description in the bottom of this video. You can follow me on Twitter when I send out these intraday price inflection point alerts from time to time. I don't do it necessarily every day. I save that for the trading room. So, but for those of you who follow me on YouTube, I do put out the Twitter alerts from time to time, so that you can get an idea of what we're looking at in the Black Ops trading room. All right, so now let's take a look at the US dollar. All right. So US dollar's trying to do the same thing that bonds are doing, trying to finally base out and get up and go a little bit. The range is still between 89 and 91 on the US dollar. That's where the Trump White House needs the dollar to be in order to do what they're trying to do with their import-export policy. So right now, as you can see, dollar needs to close above 90. Just needs to close above 90 this week, and it can keep this momentum going. Topside target, if it closes above 90 this week, is 91. And then from there, upper side resistance, trendline resistance is at 93.42, which is right hither, which is below the Kumo cloud, which is a strong resistance. And so then once it gets up here, it should drift back down again and just stabilize between 91 and 89 and just, do what it does. So we'll see. I do believe that's pretty much it for today. I think we've covered everything I need to cover. Oh, no, I did not. Let me look at the NASDAQ 100 real quick. Forgot the stock indexes. Let's pull this up. All right, as you can see here, markets, consolidated, broke out, hit a new high, 72.14 half, then pulled back. Market needs to close above 69.21 and a quarter this week in order to keep this bullish momentum going. If not, then it can lose this momentum very easily, fall below the momentum line, and then if it does that, it could find itself drifting back toward the 66.73 half trend line support, which is right here. So that's all we got right now. The bullish configuration is still here, though. Everything on this chart right now is still screaming bull market. There's really nothing bearish on the chart. So we'll have to keep our eyes open for this one. Intraday price inflection points right now is there. I think it wants to try to get back up toward the top side of the range. And that's, somewhere initial target is going to be the 69.49 level. And then we'll see if it can get up to maybe 69.90, somewhere around there, 69.86 to 69.90. 7,000 is going to be a very strong resistance inside the Kumo cloud on the intraday chart. So we'll see. Just keep our eyes and ears open, see if anything shapes up to look good here. Just keep in mind that volatility is still here. The intraday trading ranges have expanded back to 1999 levels. All right, so you got about 1,000-point intraday risk on the Dow, 200-point risk on the Nasdaq, and 100-point risk on the S&P 500. That means at any moment, at any time, the markets could intraday flash crash that and move that much and in a matter of minutes. So you have to be prepared for that type of risk if you're going to trade those type of markets. All right. So pulsewavetrading.com. That's pulsewavetrading.com. You can come learn how to uh, read these intraday artificial intelligence algorithms which move and control the markets. Learn how to read these momentum swings so that you can put the AI in your favor. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. See you over at the premium trading room once you sign up for the weekly pulse wave price triggers. The study course and all the other bonuses and goodies are free and included in the price. Peace.